Yo, what is up, everybody? It's been a while since I've updated you. Hope you're all doing very well. Welcome back to the 10-minute daily update. I'm going to try to give you an actual 10-minute update this time and time myself. It's Saturday, May the 11th. Wow, it's already May. We've made it through 4 solid months already. The halving has been roughly 1 month in already, and not much has happened since the halving as expected. So we're going to go take a look at the history of what happened after the halving, and I'm just going to generally give you guys my advice as well and talk to you on camera, okay? So a lot of people right now are trying to day trade this market, and it's great that you're trying to trade it. I commend you. But we also have to keep in mind that when it's more so bearish, which it is right now because we're more in a correction and consolidation, it's going to be much more difficult to find very good setups that are going to be profitable and have less risk as well. So when you think about it from the perspective of bearish versus a bullish market, it's very easy to make profit. Bitcoin simply breaks above the $74,000 all-time high. Alts start to skyrocket and make newer highs already compared to the 2013, 2014 year. And basically you just buy on any single dip. You look for major dips, which they will occur. And then you also look for major patterns that could look like they're consolidating, such as an ascending triangle or a bullish flag or a symmetric triangle. So in a bullish market, coins can go up hundreds and hundreds or even thousands of percents. Whereas in a bearish market, it takes a lot of work for a coin to drop, for example, 30% or even 50%. And if it does drop these amounts, it should be in your best interest to dollar cost average and make sure that you're still accumulating, because your overall long-term bias needs to be confirmed. It needs to be firmly established. And the long-term bias is clearly bullish because it's now after the halving. It's literally, in my opinion, impossible to have a bearish market after the Bitcoin halving occurs. I mean, it makes no sense for any bearish market to occur because of what the halving stands for. It reduces the block reward from 6.5 to 3.25. We're getting closer to reaching that final block and the 21 millionth Bitcoin as well, which will happen in about 10 years or so. And once this happens, the supply is curbed, the demand goes up, many Bitcoins are lost on exchanges and in private keys that people don't have access to anymore. And comparable to gold, like we always say, the price is likely to go upwards. So right now, my best advice to you guys is to do one of two things, is either to be very, like from a day trading perspective, and I'll also talk about it from the investing perspective as well. So from the day trading perspective, my advice to you guys is to do one of two things, which is either to wait for better days to come. You will be much more profitable with a lot less risk as well when you enter these positions, because the market's easier to capitalize when it is a bullish market. If you decide to day trade right now, there's a lot more risk as well, right? And the second thing you can do is still day trade right now, but you're going to be grinding much more than you would be in a bullish market. So in a bullish market, there's going to be like 20 coins that you can pick from, or even 30 coins each day. And of these coins, there might be like 5 or even 10 that are going to be very promising to trade with very low risk, with high probability to win. But right now, in this type of bearish market, if you try to trade, the chances of you finding the perfect setup is going to be more rare. You can still trade it to build that experience, to go for the days, trade on the days where it requires a grind. And if you're able to successfully trade in this type of bearish market, then you're also going to probably heavily capitalize in a very bullish market, because if you can make it through these trials and tribulations during these down markets where it's more difficult to capitalize, where you need to manage your risk much better and more accordingly. Because right now, there's so much risk to trade anything because of the uncertainty of when are we going to rally if we're going long, right? And the bearish trend, it's continuing. There are many red days. Coins are still slowly bleeding out. market cap is not really increasing to the upside in any way right now. So yeah, there's more risk, and there's a lot more risk management that's required in this type of bearish market. But if you can trade during these types of markets, you're going to gain very invaluable experience that will carry towards a bullish market. And in the bullish market, you're more likely to thrive. So it's really up to you which one you want to do. I personally think that you should dabble a little bit, especially if you're a newer trader that's still looking for experience. But from my perspective, for example, I'm a seasoned day trader that has been doing this for 9 years. I've made well over 7 figures in profit over 9 years from day trading. You guys have seen me day trade up to millions of dollars. Like my biggest size was 1.5 million, and I used to record all of my trades. So right now, personally myself, I'm not trading to make money. I'm not chasing the market to grind, to try to hunt for these trades that require a lot of time. And it's also very sensitive as well in terms of like how you approach these types of trades. So from the perspective of a professional trader that's been profitable already and has been doing this for a long time, myself personally, I would rather take a step back and trade during a very volatile and bullish market rather than trying to grind for the experience and for very little profit as well. So in a bullish market, you're gonna, like the profit that you make in 1 week, it's gonna highly supersede and exceed the profits that you're gonna make in a bearish market. I mean, 1 week in a very bullish market will surpass a few months of trading in this kind of market, right? So I would personally rather wait. But if you're a newer trader, definitely trade small, manage your risk, go for these trades, hunt for these trades as well. Try to look for setups that could be worthwhile to you, just so you can build up your experience. And 2 things can happen. You're either gonna, or 3 things. You're gonna break even, you're either gonna take small losses, or you're gonna be profitable. And if any of these 3 things occur, because you're going through this market and you're going to gain valuable experience, it's only going to benefit you in the future as well. So let's take a look at the market very quickly, guys. So if you guys see me moving like this, by the way, it's because I'm on the elliptical under my desk. I'm not sure if you guys remember, but I was severely overweight. I was 200 pounds. That's very heavy since I came to Turkey, but I've been working out for about 2 months now, and I've been dieting for 3 months. And I lost 13 kilograms, or 14, which is about 30 pounds. So I lost a lot of weight. And now I'm just like, you guys see my gym behind me, right? Over there, got dumbbells, got a pull-up bar every day because I have time since the market is not the way I want it to be quite yet. I'm just spending my time exercising, taking care of my mental and my physical health so I can reduce the amount of stress that I have in a bullish market when it's going to require immense concentration. So if you're looking for ways to pass time, if you're doing this full time, I would recommend just, I'm not saying I'm a health fitness guru or anything, but working out, it's definitely giving me a lot of energy. It's calming my mind. It's alleviating stress. It's going to allow you to generally approach the market better if you are in a fit condition mentally and also physically, just like anything else in life, right? If you take care of yourself, you're going to be better equipped to handle a lot of stresses and circumstances that come up in your life. So looking at the market right now, we see that Bitcoin on the daily chart, this chandelier exit indicator, okay? So the chandelier exit indicator is a measure of the volatility. It tells you how volatile the market is, and the green line here simply tells you how, if it's trending bullishly based off of volatility or bearishly based off of volatility. And we can see that on the right hand over here, you can see that the chandelier exit daily resistance is around 66.6K. Until we break there, nothing is going to happen. In fact, it has been such a horrible market because we just haven't been able to really clearly surpass these regions. We can see that it's been bull trapped here before, right? Or sorry, bear trapped. We can see that the support has been hit multiple times. Over here, this whole range there, and now we're kind of at the exact same spot again. And mind you that if this was the bottom, this one over here, we're actually at a great retracement right now. We're at a golden ratio retracement which is also on the 8-hour chandelier exit. So like very, very close to a golden ratio. So in my opinion, it's a very good time to buy for long term, okay? So I don't think that we're going to get much more of a dip. I mean, if we do, it's going to be a great opportunity to buy even more. But something I have to constantly remind people is their long-term bias, okay? Sure, we saw like the halving was around here, okay, in 2016, and then we got a big dip. But after that, it didn't matter. It just kept rallying, right? Because if you take a look at, like the halving was around here, okay? So if you take a look at it, I'm almost done, by the way, guys. If you take a look at it around here, May, right? It doesn't even matter. That dip right here was just a blip. So as long as you're holding long term, you're gonna achieve all-time highs in 2016. 2021 or 2020 was the same thing, except the halving was in July around here. And then after that, like, you know, we don't have an exact day. Some people are like, oh, after the halving, it dips. After the halving, it doesn't dip. We don't really know because it's changed so often. But what we do know is that it always creates a major all-time high after that. So that's the bias you need to be aware of. And part of being hyper successful in the crypto bull market, and trust me when I give you guys this advice from a veteran who's been in the game for 9 years, has been in 3 bull markets now and survived and thrived in 2 bear markets, that the best weapon that you can have and the best characteristic of a successful investor and day trader is patience. Unfortunately, we can't control the market. Even if we want things to happen right now, it's not going to work out the way that we always want it to. So the best thing that we could do is approach it with a clear and level head and be extremely patient and wait for better days to come, because they will come. There's no way in history. I have everything riding on Bitcoin. If you guys are aware of that, you might have seen my portfolio is massive. I keep literally 1% cash in my bank, not even. I got like $10,000 in my bank, not even. Everything else is all in crypto, okay? Not even 1% in my bank in cash. Everything's in crypto. I'm banking on it. And I believe that because after the halving, this slow accumulation period is here. And unfortunately, we can't do anything about it except for wait. So just be patient with me, guys. Be patient, everybody that's holding, and keep your long-term bias bullish, because your patience is going to persevere through these really bad times. So if you guys enjoy these short updates of mine, just hit the thumbs up button. For those that are new, thank you so much for joining me, and make sure that you're subscribed to my channel. And make sure you guys also, follow me on Instagram. I'm always posting like funny things or motivating things about crypto, about life. I'd really appreciate a follow on Instagram if you guys like my work. Thank you so much. Bye now.